Hello everyone, and welcome back to the channel where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze setups. Today, we're dissecting a very specific name that has popped up on our screener, and it's quite an interesting one, PFSA Inc., ticker symbol PFSA. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's zoom in on PFSA. PFSA Inc. operates in the healthcare and medical devices sector, a space known for innovation. They develop bioengineered sensors for continuous clinical-grade data collection, like their Lumio Oxygen platform. While their technology is compelling, the company currently has a microcap market capitalization of just $1.09 million. Looking at recent price action, PFSA has seen some significant swings. Today, the stock is down 44.22%. However, over the last 5 days, it's still up a staggering 110.28%, and over the past 30 days, PFSA has climbed an incredible 257.8%. Show chart, PFSA 30-day performance. Today's volume is 1,145,900 shares, which is about half its 30-day average volume of 2,366,625 shares. Where's cost to borrow and why it matters? Our focus today is on why PFSA caught our attention on the hard-to-borrow screener. This brings us to a key concept, the cost to borrow, or CTB. When you want to short a stock, you essentially borrow shares from a broker and sell them, hoping to buy them back later at a lower price. But borrowing isn't free. Brokers charge a fee, expressed as an annualized percentage, for lending those shares. The higher the CTB, the more expensive it is to maintain a short position. For PFSA, the current annualized cost to borrow fee is an astonishing 901.5%. To put that into perspective, if you shorted PFSA for a full year, you'd pay over 9 times the value of the shares just in borrowing fees. This extremely high fee indicates significant demand to short the stock and or a very limited supply of shares available to lend. Why the stock is hard to borrow right now. So why is PFSA so expensive to borrow? A major factor for PFSA Inc. is its estimated float, a tiny 0.5 million shares. The float represents the number of shares readily available for trading. When the float is this small, even a moderate amount of short interest can quickly consume the available shares, making them hard to borrow. With shares currently available to borrow being unknown, and a small float, the intense 901.5% CTB makes sense. Supply is constrained, and demand from short sellers is high. Our internal composite squeeze score for PFSA is 49.4 out of 100, reflecting this dynamic. Squeeze mechanics explained. This brings us to the potential for a short squeeze. Imagine short sellers are paying over 900% CTB to bet against PFSA. If the stock price starts to rise, even modestly, these high fees begin to eat into their profits or accelerate their losses. As the borrowable supply shrinks and the price ticks up, short sellers can get squeezed. They are forced to buy back shares to close their positions, which creates buying pressure. This buying pressure further pushes the stock price higher, triggering more short sellers to cover, creating a cascading effect. It's like a coiled spring, and the high CTB on PFSA indicates a lot of tension in that spring. However, it's crucial to remember that a high cost to borrow does not guarantee a squeeze. It can also mean short sellers have strong conviction in their bearish thesis and are willing to pay a premium to stay short. Dilution risk check. Before getting too excited about potential squeezes, we always check for dilution risk. Dilution occurs when a company issues new shares, increasing the total share count. This can offset or completely negate a short squeeze thesis because it provides new shares that short sellers can potentially borrow or that can absorb buying pressure, preventing a rapid price increase. For PFSA Inc., we found no recent dilutive SEC filings such as -1s, -3s, or 424Bs in the last 90 days, which is a positive sign for any potential squeeze scenario. Recent reverse split watch. Now let's talk about a significant recent event for PFSA, a reverse stock split. PFSA Inc. executed a 1-4-4 reverse stock split just 3 days ago, on August 17, 2026. A reverse split reduces the total number of outstanding shares and, by extension, the float, while proportionally increasing the share price. This can sometimes make a microcap stock like PFSA appear more appealing to certain investors or make it easier to meet exchange listing requirements. Historically, many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split, as the reset price and reduced float can attract new attention. However, this is a pattern observed in some instances, not a guarantee of future performance for PFSA or any stock. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should we watch for with PFSA Inc.? First, the cost to borrow. Keep an eye on that 901.5% CTB to see if it sustains or increases. Second, borrowable shares. If the availability to borrow shares further shrinks, it adds pressure. Third, volume. While today's volume is below average for PFSA, an increase in buying volume on positive news or sentiment could be a catalyst. Fourth, price action. Any sustained move upwards could trigger short covering given the high CTB. Finally, watch the post-reverse split dynamics. Given it happened only 3 days ago, the next few weeks could be telling for PFSA. PFSA Inc. PFSA presents a fascinating case study with its tiny float, incredibly high cost to borrow of 901.5%, recent reverse stock split, and significant price volatility. While the potential for a short squeeze exists, remember the risks involved, especially with microcap stocks. Do your homework. If you found this deep dive into PFSA valuable, please hit that like button, subscribe for more hard-to-borrow stock analyzes, and let us know in the comments if you've been watching PFSA or what other tickers you'd like us to cover. We love hearing from you. Thanks for watching, and we'll see you in the next video.